Alrighty guys, what is going up? Welcome back to the best investing channel on YouTube. I am your host Carter, and in today's video we are going to be looking at why I just spent over $10,000 on more Tesla stock. For those of you that don't know, I am a huge Tesla bull, meaning I want this thing to go to the moon. I'm not a bear. I don't want this thing to get suckered down and go to $100 a share. I want this thing to hit, $1,000, $2,000 a share. And yeah, I think it could. I definitely think, that would be more of a long-term outlook, and as a long-term investor, this volatility of Tesla really doesn't scare me because I love the fundamentals and pretty much the overall company. So let's actually look at some of the fundamentals here. So really, there's some things that I love about it. We have a 73% increase of total revenue, which is fantastic. But the biggest thing is this huge increase of cash on hand, $17 billion of cash, 112% increase, which is crazy. Now, looking at this long-term debt, that's only $9 billion in long-term debt. So they have more cash on hand than long-term debt, which is absolutely fantastic because if that's just say they ever go through a rough time, they have more than enough cash to actually pay off their long-term debt and continue to use that to grow the business. Now, Tesla just recently came out and said that they are not accepting Bitcoin because it is a big environmental factor. And I think that really made the overall price of Bitcoin fall a lot because Elon Musk is a huge cryptocurrency guy. And when he announced that, a lot of people that were holding Bitcoin got a little nervous of kind of everything going on behind it. But looking at Tesla here, so I think that with Tesla growing their margin, that's another really, really good sign of a growing business. They used to have a margin rate at around 1.5%, meaning every time they brought in $100, they only profited $1.50. But, when you're working with millions, if not billions of dollars, it adds up very quick. Then they had a margin of around 2%. Now it's around 3.18. So every $100, they actually only keep around $3.18 after they pay out, all their expenses. So yes, I'm well aware that they have a very low margin and they have a very, very high price to earnings. I completely understand that. And what I always say when people bring that up, because that is the most common thing that I hear, oh, Tesla's price to earnings is too high. And yeah, it's very high. It's a growth stock. So when a stock has a higher price to earnings, you have to understand that that stock definitely carries a little more risk than a traditional ETF or blue chip stock like a company like Apple or Amazon or Microsoft. Tesla is definitely going to be more volatile, but overall carry more risk, but also more reward. So you have to understand that, okay? Not to mention, guys, with Tesla's volatility, you can use that to your advantage. I'm a huge dollar cost averager. So I've been dollar cost averaging in this stock pretty much every single week over like the past 2 years. There's been a couple price points that I've went absolutely super heavy in. One was about a month before they did the split. I put $2,000 in it. Okay. Now that 2,000 turned into about right around $5. And then I did buy more when it broke above $500 here. When it broke above that resistance, I bought more. And now, do you guys notice this price movement? Okay, so every time that this stock we've seen come down to about $600, we've seen a lot of buying pressure stepping in. Okay, so it came down once, twice, and now we've seen this sell off here again, right? So what I'm going to do is I'm just going to average more into my position. I'm going to average in because this is a huge sell-off. You have to understand that, yes, this looks, not the greatest because we have a short-term downward trend, but we still have an upward long-term trend. So I really think that we'll have some sort of buying pressure stepping in. If not here, probably for sure by $500. And if it continues to fall, what I recommend doing if you're a Tesla bull is to just average into your shares. If you think Tesla is going to be around for the next 5-10 years, average in, because Tesla is definitely one of the most sought after investments right now. And so when something dips down this much, all it takes is a good, good earnings, a good solid, report, news article, fundamental catalyst to actually make the stock almost go parabolic, just like it did in here. So I think, guys, that this is a solid investment right now. I think that there's been a lot of people on the fence about this because of the crypto and because of some of the fundamentals behind it, such as the higher price to earnings. But you just have to understand, maybe only put 1-2% of your portfolio into a company like Tesla because you understand the risk and reward. So that's my recommendation on Tesla. I'm buying more. I love this company, and I don't think it's going anywhere anytime soon. I think that we're just getting started with this overall electric vehicles and the clean energy. I'm a huge bull on both of those, guys. So I hope you guys enjoyed it. And overall, I hope you guys got something of value out of this video, because that's the main idea. I always want to shed light on stocks that I think are very undervalued. And look at this. Support. I think that this would be a no-brainer. If it continues to fall, just average down. We'll get buying pressure very, very soon. The fundamentals are very, very good with the very, very high increases of revenue, guys. So I hope you guys enjoyed it, and overall, I hope you guys got something of value. We will see you later. Remember to stay happy, guys, stay positive, and stay safe out there. Take care, everyone. Peace out.